Wah, wah. Okay. Let's go monetize this mofo. YouTube. We'll go to YouTube Studio. No. And we'll go to content. Thank you. I probably shouldn't. Here. We're going to go over there. Next. Check your device. There we go. Morning, Nevin. Morning, Mark. I'm monetizing this mofo. Okay, there we go. We're monetized. Yes, it's me. Got it. Okay. Hit that thumbs up button. Morning, Chris. I got to turn this to top chat. Live chat. We're going back to Safari, and we're going to do some market scans. I've got a ton to go over. Oh, come on, market scanner. And core portfolio. Okay. We'll close that down. XLY got a cross up. SPG, another cross up. Did SPG go down and then back up? What do you say? Yeah, it did. Kind of played around in that area. Huh. Let's look at brokerage holdings. DOCU. So, I bought DOCU. There's a report. It is going to be bought. I bought at 62. We're trading at 61.33. May have been, a bit premature. But if it's going to be bought, this is basically why I bought it. If it's going to be taken private, we're nowhere even close to the 200-day. So this could be quite a bit upside if the board approves some type of sale. Just a little. I think I bought 100 shares, so it's like $6,000. I will add to it if I think it's a good one. I'm going to put this on so I don't hear the outside world. RYLD. Let's get energy names. Energy could be a good play here. UCO. I put that in my notes before I even saw it crossing up, but now you're up 5% today. There's still no confirmation. I mean, at 27, you do have confirmation. Yeah, you're up here. So, might be a solid gain. I don't know. Levered ETFs. Let's look at these mofos. No, nothing. Wow. Low cost Vanguard. I don't really care that much about these because it's more entries. You should have TrendSpider by now. VIG, VTI, Spider sectors. XLY got the cross up, but are there other sectors that got a cross up? Let's see, Netflix up 1%, Oxy's up 1.6%, Devon's up 1.3%, Bank of America's down 2%. Qualcomm up 1.6, Roblox down almost under 40 again. Tesla's down 2%. Walmart, I don't think that Walmart's too bad at all. UNH is down 4%. That's almost below 500 again. So that's a solid play. Hooah. KLAC. This one's just been running. Hilton Honors. Worldwide. Frog. Frog has been running. I mean, Frog has just been going nuts. Look at the long term on Frog. If we go to a weekly on Frog. I mean, look at that. Down from, I mean, if you just bought at the October, you're up 90%. I'm sorry, that's May. From October, you're up, and this is a database name. You're up, what, 51%? We'll put that one in. I like that name. I just like the name Frog, too. Twilio has been a solid performer on the pullback from 75, 77. That's just since January. So you got a gap up above here at 74. We'll put that one in. Not owned. Okay, let's go to the Dow. And then we're going to start this mofo. IBM. Wow. IBM is solid. I mean, listen. IBM, for, all the Walters that have a blanket over them in the old age home, from October 25th, a Dow component up 17% in just under 90 days, 78 days. That's pretty, I mean, an old-time tech. The problem with IBM is I think AI now is getting its love. IBM probably is going to get some love here. But if you look at it long term, I mean, shit, you have made if you bought back here at 172, I mean, let's pull back a monthly even on this one. If you bought in the heyday of 2012 up near like 200, you're still negative, but monthly you're hanging around your 200 day. So it's a solid one. Let's look at the NASDAQ 100. MCHP, Microchip Technology, Take-Two Interactive, Broadcom. Broadcom with the pullback is probably a pretty good one. Cognizant, Fastenal. That one probably has a rebound. KLAC, Lam Research, ROP, Roper, Mr. Roper. Intuit, we kind of just crossed up. VRTX, Vertex Pharmaceuticals. Look at that one. CDW, ASML. Let's look at the S&P 100. IBM. This is Altria. No, I'm not going to put that one in. Simon Property Group. Yeah. Okay. DAC 100 had quite a few cross-ups. Dow and S&P. Okay. Let's get our 4-hour algo set up. Strategy tester. We'll go to the 4-hour right there. Run the 4-hour on Simon Property Group, 143. You're trading at 144. Let's look at QQQ. I'm sure I have notes in here, yeah. Volume shelf building. We closed that gap. 407 was the buy. We're trading at 409. I think I got a bunch yesterday at 408. Yeah, let's see. Let's see. I bought a bunch yesterday. I bought another, 100,000 of stock yesterday. 50,000 of stock yesterday. Let's see. Go down here and I'll just look at all positions because I know which ones I bought. So I bought DOCU at 6210. 6210 is where I got DOCU at. QQQM I bought at 168.33 and then 168.45. And that was it. Because I will go over, I didn't look in Seeking Alpha of IWM, which I have to set up right now, in fact. I'm going to put this. Let me put this on my link tree. We're going to put this on our link tree. Now that I made it public, I might as well put it out there. We're going to add new link. We're going to add the URL. No. Done. And we're going to move that down. Stop. Thumbnail. Here we go. Done. Let's see how it looks. Let's see how it looks. I think it'll look okay. Since we got the Patreon up there, yeah, it looks fine. One-on-one per month. 1 hour per month, one-on-one. Honestly, I had 3 emails yesterday. 3 emails yesterday about this. Public. I couldn't believe it, but you people are crazy. Let me pull up, going back to back. Okay, we're going to start at the bottom because I do have quite a bit of links. Okay, we're going to pull that one up for Tesla because somebody asked me about Tesla, so we're going to pull that one up. We're going to pull up this one from DOCU. I do have to do the charts. Seeking Alpha, 4.6 billion into those yesterday. The Riot and other platforms. If you're in Mara and you weren't watching the charts like I wasn't, you got smoked once it hit 30 and backed out. UNH earnings. Oil. Biggest movers. Zim. And then YouTube. And
not making money. So you've got to kind of think about.
Okay.
Election year come. And don't forget.
I need a better. There's at least a better snapshot of me. If you guys haven't watched this one, this is actually a pretty good. I thought it was a really good interview. He interviewed me yesterday about the history and all of that stuff. Let's see. Let me see how it looks if I get out of the strategy tester. Can you still see the chart? Yes, you can. Okay, you'll still see the chart. And we're going to go to the 4-hour. Run. Okay, I'm going to go and real quick, just let me look. Okay. Okay. Hold on one second. I will be right back. Okay, girls. We're going to be quiet now. Okay. We got 18 people in here. Probably 16 people are bots. Hit the like and subscribe button. Yeah. Let's see. What is Weeble up to? I love my Weeble account. I just have no cash in there. And I'm not willing to put more cash in there. I've been trading long term and you know, little stuff. And Jim Cramer is going to ruin football for me this week. Let's see. I need to. Let's see. Delta, we're going to go to Seeking Alpha. I'll just leave this open. Okay. I like the setup. I mean, I like the setup to go higher. That's why I've been buying long. I got my notes here. Yeah. Okay. I'm gonna start recording. Good morning. It's PPI. PPI Friday. January 12th. I've got my notes here. I'll kind of go over some stuff. One of the things that I really want to point out, I thought this was a fantastic interview that James did. He's the pragmatic investor. If you haven't watched it, go and watch it. If you listen to me, I think this is, if you're new, if you didn't start in 2020 listening to me, then you might want to know about my background. You might want to know why I started. You might want to know about how I view this channel, why I do what I do. Things of that sort. He interviewed me about all of that and the tools. And I'm going to do a tools video. And I've said this before, the two tools that I use and the two tools that I put out there are TrendSpider and Seeking Alpha. The third tool that you can get is the daily stock pick newsletter. But I thought that interview was really good. If you want links to anything, I've got to put, didn't put the YouTube link on here, but Linktree. You've got all the tools that I have that I use. If you want to get them, you got TrendSpider, you got Seeking Alpha, all on special offers using my codes. And Webull. Webull's a great tool. I mean, Webull's just a fantastic app to trade in. You got my newsletter, Daily Stock Pick newsletter. It is here. It is free during the week. So at the very least, you should sign up for the free one. If you don't sign up for the free one, you can sign up for the paid one. The paid one comes with education over the weekend. If you're too lazy to get the education over the weekend, that's why I launched Patreon. Now, Patreon is crazy. I think it's nuts. 1 hour, but you get one-on-one meeting with me. You can ask me any question that you want. I will give you my honest feedback. It's just an hour with me. So I think it's crazy because I think you can get the tools that I use for $1,000 and probably do just as much as I do. But for those people that want a little bit extra, I'm there for you. But I think the interview explains it very, very well what my goals are. My goal is to teach you how to trade, how to look at things, how I view the market. Not to, instruct you how to go about a strategy, but to help you build your own strategy. We're all different. So I think that's a great interview. I think looking at that one's good. PPI, we can look at essentially Seeking Alpha has all of this. PPI unexpectedly slips in December. What was interesting was Thursday, the market was down because CPI, Consumer Price Index, went up unexpectedly, and the market assumed, inflation is going to be sticky. Maybe they don't reduce the price of the federal rate. Let me turn on this light. It doesn't reduce the price, the Fed funds rate. Maybe they're not going to reduce in March. And then what happens today? The Producer Price Index, which is the cost of goods, unexpectedly slips. Everybody thought, hey, if PPI comes in line, what this means. The PPI feeds into CPI because if it costs more to actually create the goods, then it's going to cost consumers more to buy the goods. So what you're seeing is the assumption that a rate cut will happen in March again went up to about 70%. You can Google that one. That's the best bet of what I can tell you. The biggest movers in the market today, Zim shippers, we'll go over that. There's a huge tension in the Red Sea with overnight attacks by the U.S. on Yemen and the Houthis who have been looking at getting us. We've gone over Zim before. Zim is a shipping company. I'm not a big fan of these, but when they actually have the pricing power and they can charge people more, they make more money. So Zim is one of the biggest ones. Tesla is one of the biggest losers, indicating price reductions on 2 Chinese models, a response to fierce competition by rivals, and concerns about suspending production in Europe due to that delivery stuff that we just talked about with the shippers. So you can take a look at this article. I will put this in the newsletter. If you're interested in any of the stocks that are affected by this Houthi stuff, you can look at this: USO, UCO, BNO, SCO, USL. All of these stocks are mentioned in this article. So you can take a look at that. They're all right over here, and you can take a look at them. UCO is the one that we typically trade, that I should say that I typically trade. UCO is the Ultra Bull, so it's 3 times levered on the futures of oil. You have an entry today at 26.52. In pre-market, you're trading at 27.58. I've had this note in here, no confirmation, so be careful. At 27.58, you're up here. We have confirmation. I think that essentially oil may be an opportunity right now. It's Friday. I would not buy a triple levered ETF on the upside or the downside on a Friday. I typically don't like to hold them. You know, if you listened earlier in the week, I am holding TQQQ, and I'll give you reasons why I hold TQQ in the future of this episode, because I still like it. I mean, I still think we're in a bull market. So I wanted a triple levered portion of my portfolio. It's not a long term, it's a short term, but I'm still going to hold over the weekend unless for some reason we get some type of news that just brings down the market today. I don't expect that. But if by 4 p.m. we get some type of news, or even in the after hours after 4 p.m., I could pull out. But don't follow a douche on the internet into trades. I went heavy into a couple of stocks yesterday. I will go over that as well. But let's look at some of the earnings from yesterday. United Health, they beat, but the problem is their cost. And so United Health is down big in the pre-market, down 3%. It was down 5%. It was down around 5.15 earlier. It's trading at 5.21. This one has lost confirmation. The MACD is probably missing out. Down here, the buy at 5.22. You're back at this level. So I think the 200-day provides you some type of support at 5.21. If you start to see confirmation again, the 50-day is moving down. You will continue to see the 50-day moving down. The 200-day is starting to move down. You're going to see these Bollinger Bands cinch up. The MACD is going to cross down above the oscillator, wait for it to get below the oscillator and cross up. Your RSI is at 57. Sellers are going to start to show up. I got out of this at 560. The problem is cost. It's just costing more to take care of people, and they can't raise prices fast enough. It's the healthcare system in this country. It's just horrible. BlackRock, they beat, and they raised their dividend by 2%. So if we look at BLK, I am not in this one. They are the largest, housing owner in the United States. They just bought an infrastructure company as well that they announced. They made $9.66. I mean, per share, they made $9.66. That's crazy. Its valuation is a little nuts. In pre-market, it's down 0.71 at 787. You can see if we just pull this back to July, where we had another little spike on this, and we look at where people are holding, you can see there's a clear volume shelf here at 755. You're at 787 right now. So you're within this little volume shelf. If you start to build, there's some gaps down there if you want to trade this one. I don't know. It doesn't seem exciting to me. This one doesn't. Delta, DAL. Their guidance was down. They are down 5% in pre-market. It is under $40. I think under $40 is probably a good price for this one. Higher cost of oil going forward in the future. They did announce that they're going to buy 20 new Aerojet from the European company. I forget the name of it, but they're going to buy 20 of those. Nothing super exciting about this. I think you're going to start to see some summer reservations tick up, specifically on Delta. The problem is the guidance was just below analyst expectations. I think people are expecting big things from this company, and they're just not delivering. I'm not a huge airline fan, so Delta, it's okay. Bank of America, This one had large charges for pre-tax charges and having higher yields being an issue. Net interest income, NII, is probably what brought it down, but that will get better. So I continue to say this is a good buy. Here in pre-market, you're down 2% to 32. You're covering this gap. It's right at 32.18. The stock is trading at 32.20. Your MACD is going down. It's going to continue to go down. Wait for confirmation. The algorithm got you out with a 26%. I was saying, hey, if you're trading this one, get out at 30% up here. I didn't think it was worth holding into the earnings because I did think earnings were down. I am not trading this one. I will be looking to add, if this gets under 30 again, or it breaks down here to about 30, I will be adding to this again. I'm just holding for the long term on this one. I like this one. I like this one in particular. Wells Fargo is another one I own personally. It is not in our core portfolio. Bank of America is. Wells Fargo was a broken company. They had bad management. They're starting to fix it. This one's down 1.88. The reason it's down 1.88 is because of this run. And again, they beat earnings. Everything's fine with Wells Fargo. I'm not getting rid of it. If this one manages to dip down to about 45, I will start adding it again. You can see right here, that's where the most recent support is there. You do have gaps. They've all been filled except for this one down to 47. And you're at 48.12. Wait for confirmation on this if you're interested. Citibank, they wound up beating as well. They're in the middle of a recovery. This one is up 0.81%. 52.50. You can read more about the earnings if you'd like. 84 cents per share. They had good outlook. So I don't think you're crazy in buying this one. Again, if you look at Citi, I do not own this one. I think I sold out of this one midway through this kind of thing. I did not announce that I buy it. It was way back here. I think I bought it maybe in October. I may have even bought it somewhere in this neighborhood and just got back to even. You're bouncing off your 200 day. So on the weekly, it's a recovery. Your RSI is a little bit high. This one, I think it's still a solid bank. JP Morgan, the biggest of the banks that has been on an enormous run. This one beat. They're up 2%. This is one that people want to continue to add to. I don't own this one. I will never own this one. This one, I just don't like Jamie Dimon. Just my thing. I think he knew about Jeffrey Epstein. I think he still took his money. I just don't want to own this one. And it's more of an ethical issue than it is. It's a good, solid bank. I mean, honestly, this is a good business to be in. I don't even own XLF, even though I said it was the biggest one. I do have significant positions in Bank of America, in Morgan Stanley, in PayPal, in Square, in Wells Fargo. And I thought there was one more financial that I had. I don't know, but there might be one more. So I may buy XLF. XLF right now, let's see, in pre-market, XLF is down 1%, 0.11%. So the big banks didn't take it down completely. You can see we're still in this run. If you bought with the algorithm, the 4-hour algorithm down here at 32, you are up in 71 days, 16%. Long term on this one, when you look, because remember, XLF is not really a trade. You're at the top of this range that I identified. I think I identified this back here, in October. It might have been when it dipped down here, and I said, yeah, you want to trade within this range. Upside, I mean, all-time highs are 41. So I'd rather go into something else, even though I do think this will be a good year for the banks. So if you like it, you can do there. I was doing some ETF portfolio cleanup, and I realized that I owned a lot of this ETF, IGM, and it's a large percentage of my portfolio that I just didn't even know. It's a retirement portfolio that has a decent amount of money in it. It's close to 7 figures, but I didn't even know that I had this. It was just sitting there, and it was gaining, and I just never looked at it. In looking at it, I wanted to show you some of the ways that Seeking Alpha can help you look at this stuff. So I went and looked at it. This is a tech ETF from BlackRock. It is an iShares expanded tech sector. It's performed incredibly well, just incredibly well. Look at that. 1 year, 52%. That beats the S&P. 5 year, 151%. 10 year, it is up 401%. As far as the ETF grades, momentum, A+, expenses, B-, dividends, F, because it doesn't pay enough dividends, risk, B-, liquidity, A-. It is ranked 5 out of 90 in the technology ETFs. SMH is the highest, IYW, which we will talk about, QTEC, which is the First Trust 100 Technology Sector Fund ETF, CIBR. Those are all above it, the cybersecurity. As far as the quant rating is concerned, that's just the quant rating from Seeking Alpha. And again, this is part of the Seeking Alpha tool that I want you to look at. In looking at peers, when I go over here to peers, that's where I found this IYW. And I said, okay, let me look at long-term. And this is, if we just go not price return, we want total return because that includes the dividends. And you can see some of the peers when you look at. Now, what I want to do is I want to edit this symbol because what I want to look at is I don't want to look at FXL. I don't want to look at WFH because they all have problems that I can identify if you'd want me to. But I want IYW and I want XLK. Those are the three that I'm really interested in looking at comparing. And when I compare these, on these, you can take a look here. We look at not just the price return, we want the total return. When I scroll down, I can look at these things. Now, IGM has $3.7 billion assets under management. The expense ratio is 0.41. IYW has 14 billion. So it's 10 times as large as IGM. It's got a smaller expense ratio of 0.4. XLK has about 5 times the number of IYW, and that has a 0.1, significantly less. When we look at the total return on charting, you can see IGM gives you a 53, IYW gives you a 59% over 1 year. 3 year changes a little bit. IGM gives you 30%. IYW gives you 45%. XLK takes the lead at 51%. When you go to 5 year, IGM 156, IYW 206, XLK, the king of the mountain, 217. When you go to 10 year, this is where it gets a little bit interesting, not too interesting, but IGM 430%, IYW 498%, XLK 514%. Let's go back to 6 months because that's where IGM really outperforms, 14.99%. So in the short term, I was better off holding IGM. When we go to the grades, you can see expenses B-, XLK A+ on momentum, A on expenses, B+ on dividends. That F, it does stick out to me. It just, you'll see they don't pay dividends. Risk, B-, C+ is a risk. Liquidity, they all have A's. Now, trading, you can see where it is compared to its 52-week high. You can see price to 52-week high, price to 52-week low. You can see weekly volume, the shares. Dividends, this is where XLK really outshines. The 4-year average dividend, XLK is 0.9, so it's almost 1%. And the dividend growth, IGM has reduced their dividend. Just kind of everything pays quarterly. Performance, you can see where they performed. Liquidity, again, concentration, risk, technicals. Where it really starts to show is the holdings. So you go into IGM and you can take a look. IGM specifically, let me scroll down on my notes so I can see exactly what. Yeah, IGM, the number one is 9.33. This is an actively managed ETF. So they're constantly moving this stuff around. It doesn't track technology stocks. So you have access to NVIDIA, Microsoft, Apple, Meta, Alphabet, Broadcom, Adobe, Salesforce, AMD, 285 holdings. If we go back and we look at Let's see, peers. Do I have to go type it in again? Yeah, I have to type it again. If we go over to IYW, remember, 263 holdings. If we go to the holdings of IYW, the number one's not NVIDIA. It's Microsoft. Number two is Apple. NVIDIA's way down at number 4 at 5%. So this is greatly weighed down by Microsoft and Apple being what? 35%? So the rest of it, it's only got 138 holdings. So it is greatly outweighed by Microsoft and Apple. We then go and look at XLK. And remember, this is where these three differ by a lot. This one only has 67 holdings, and 45% of that is Microsoft and Apple. So if I want more exposure to NVIDIA, I am probably better off holding IGM with these guys moving these percentages around with 285 holdings. Again, it just gives you a more more broad exposure. That's how you use Seeking Alpha to try and determine, hey, is this the right fit for me? I don't know that it's the right fit for me. I just was researching it yesterday. I really like Seeking Alpha so that I can look at this stuff. There's a lot of other things that go into this, meaning dividends, risk, liquidity, peers, options charting. You can take a look at everything in Seeking Alpha, even if you want to get an alert. So again, don't be afraid to pay the $189 for Seeking Alpha. I think if you've got a portfolio and you manage this stuff, I do think that there is a significant benefit to looking at your own portfolio, looking at what you hold, and then finding alternatives. Remember, I didn't even know about IYW. I knew about XLK. I own XLK. IGM, I didn't even know that I owned it, but now I learned a hell of a lot more. It's outperformed in the 6 months. Maybe I'll take a look and just roll that into XLK. But that's how you kind of take a look at it. So I wanted to make sure everybody knew that. Why did Riot Platform stock go down today? Bitcoin bears gains. This kind of outlines a little bit. There were 49, $4.6 billion went into the ETFs yesterday of Bitcoin. So the new ETFs got $4.9 billion. Now that's expected to go significantly higher. But what I wanted to do was show you Mara. And I'm going to go to a 5-minute chart here on Seeking Alpha. And we're going to say, do I want extended hours? Yeah, let's go to extended hours. And we're going to go to a 5-minute chart. And the reason I want to show you this 5-minute chart is because if you were hawkishly watching your positions yesterday, and I know we had a discussion about Mara, where I thought it was a $30 stock, and it was up here at 28 in pre-market, and I said, don't worry, it's a $30 stock. It got to 29.06, 29.18 up here, 29.18 in the second 5-minute candle. Then it lost confirmation. So if you were watching your stocks and you were watching confirmation and you were watching the charts, you could have gotten out either with a slight loss, a small loss, even a small gain. I mean, if you bought back here at, $24 and you got up here and you lost confirmation at 27, that's a great gain. This is how you use confirmation to trade if you are trading. If it's a short-term trade and you want to look at 5 minutes, not a problem looking at 5 minutes. You could have bought Mara down here at 21, and then you could have sold it up here at 23 because it kind of, again, confirmation over that 9-day. If you want short-term trading, this is how to do it. Mara, if you're going to bitch at me that I told you to buy at 28 and you didn't have some type of charting program, I got a great letter from somebody yesterday who said, hey, I just did my first trade using the MACD and the RSI because of your program. Again, that interview with James, the pragmatic investor that I did, it explains that's exactly the person that I'm trying to reach. The person who didn't take, it wasn't just a hunch that you're buying. It's an actual process of trading. Right now, Mara looks like in market, it's down 2% at 21.95. I will tell you, when I read this one, and I continue to say it, I believe that the money came out of Mara and the miners yesterday in order to buy the Bitcoin ETFs. I think that's what happened and why it fell so promptly. If we look at ARLP, and I will have the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 ETFs that went yesterday. I will have 5-minute charts in the newsletter for you today. I will chart every one of these because what you can see is this is why I don't like buying things on the first day. While Bitcoin was crazy, these are trading at significantly different rates. Right now, you can see ARLP, which is one of the largest ones, that is down 0.77%. GBTC, which is another one. This one didn't fall as much yesterday. It went down, but it didn't completely crash. You had this death cross. This one has a large history of candles. FBTC, which is the Fidelity one, you can see 5-minute candles, same thing. You crashed on open and it just found a settling. So you want to make sure that you find these settlings, and you can't do it for a few days. I'm not afraid that Bitcoin's going to be 60,000 in the next week or so. I'm afraid that it's going to be 120,000 and I'm not in it within the next 6 to 8 months. But I'm not worried about buying this. Patience is going to be your best bet. Now, I will tell you, again, I'll have all of those 5-minute charts in the newsletter, so sign up for the newsletter if you haven't been. The interesting thing was Vanguard put out a statement yesterday. We will not be offering a Bitcoin ETF. This is the largest ETF fund, Vanguard. Largest ETF fund in the world, and they're not putting out a Bitcoin ETF. Kind of tells you it's not all roses and rose petals and fine wine. It's a little bit wonky. Netflix hit 500 yesterday and got rejected off that. So continue to watch that. I think it's going higher. I did not add to this one. I probably should add to it, but I found out that my dad has a ton of this, so my inheritance has a ton of this. It's going above 500. You still have 47%. To this $700.99 all-time high. I think it's going to get back there. I think it's going to be a long trudge, but I do think it gets back there. CrowdStrike is one that I noticed yesterday. I got out at 247, and I got out at the end of the year thinking, oh my God, there's a button hook. I did not get back in when it told me to at 265. I said, I just got out of this one with a huge gain. I was somewhere in the neighborhood of 150 was my average price, 160. Nice gain into the end of the year. Took the profits. I'll pay the taxes on it. I think I had some losses to write off against it. I may be at 0% taxes this year just because of the way I run my stuff. But again, I haven't gotten back into this. It's crazy. I do hold it in ETFs. I do hold PanW. Palo Alto, which I've said under 300, you'll be able to buy this under 300 again, I believe. If you don't want to wait, you can buy it. It's got confirmation. But I do own PanW. There's the other one that has been beaten down. If you guys want to get into it with cybersecurity, it was beaten down on earnings. This one still, $75 is the gap that you're going to fill from the last earnings. I think that's where you're going. You're going to fill that gap. I've said it before. This 31% right here on Fortinet, I think it's a good company. I think they've fixed some things. If we look at a weekly, you can see they just hit the 200-day. They had some problems. I think they fixed it. I think they'll be fine. I think security is, cybersecurity is what you want to invest in. DocuSign. DocuSign was interesting because they made mention yesterday that two private equity firms are competing to acquire DocuSign and take them private. It shot up on this news. I wound up buying at 62.20, I believe, 62.10. You're trading right now at 61.97. You can see the algorithm got you in at 61.39. That was this morning. Now, the reason it got you in, look at that MACD fall down right there. The RSI, we are overbought at 71. But the reason why I took the chance and paid the premium, because I did buy the premium. I heard the news. I just went in and I did a market order for 100 shares. So I've got about $6,000 into this, $6,200 into this. But the reason I did this was because of this weekly chart. If we pull this back and we look, the majority of people are holding here between 48 and 59. There are not many people, but there are some people who are holding up here at about 140, 150. As we start to go up, these people that are still holding start to sell, putting some downward pressure on this. But I know, personally just trading, that in history, if private equity is taking a company back private, you're going to see quite a bit of premium being placed on that especially if two firms are going after it. The other thing that I saw was Quant has it as a strong buy at 4.8. I don't care about these Wall Street and seeking analysts. If the Quant has it as a strong buy, I think it's a good one. Look at the factor grades. Valuation C+, C-. It's expensive. Growth is a B+. Profitability, A. Momentum, A. Revisions, A+. If we go over to FinViz and we look at DOCU, you can see the PE is 245. The forward PE is 21. They're making money. They're up 3% this year. Over 1 year, they only made 5.68%. This has been a beaten down stock. So I'm taking a chance at buying at 62. I'm hoping those private equity services, maybe they're doing 70. Maybe they're doing 80. They could be up here at the 200-day at 135 to try and take it private. Whatever they offer, I believe it's going to be higher than what we're seeing right now. That's the hope. FYI, Tesla, we'll go into it with the social request. Anthony, good morning, Gary. I've listened to your podcast every day and just wanted to thank you for everything that you teach. I'm building my wealth and more every day, so thank you. Also, will you check out NVDL on the podcast? I like this one. What do you think? NVDL, I think that's the NVIDIA leveraged 1.5%. Here's the thing. If you think NVIDIA is going up in the short term, buy NVDL. Now, here's the algorithm makes you 170% over 13 months because it's only been out for 13 months. Buying and holding makes you 295%. The reason is because, let's go DL. We'll go NVDL. And we're going to chart this against NVIDIA. It's a strong buy in the quant at 4.97. Again, it's a 1.5 levered. So if we just take that out and we'll select the symbol of NVIDIA. Again, this is why, Seeking Alpha is so good. You want to know if it's a good buy? As long as you're in a bull run on NVIDIA, this one's a good buy. Look at NVDL. Over 1 year, 380%. NVDA, 242%. Short term, NVIDIA is up 15%, but NVDL is only up 10% because, again, you've only had a couple of, big moves. You had some downward moves in NVIDIA. Over 5 days, NVDL, huge, 14%. NVDA, up 10%. When you look at, we can't really go past 1 year or 3 years because NVDL is new. Just understand it's a levered ETF. So if you look at this, they have long NVIDIA, financial instruments. I guess it's calls and puts, and they have Granite State Bank shares, 14%. The actual expense, it's hugely expensive. It is 1.15%. Expense ratio is an F. I mean, it's just hugely expensive. So I would say if you think NVIDIA is going up long term, you could buy this one. But you saw in those charts, I'd rather see you buy NVIDIA. You don't know what's going to happen with this. The risk is F, expense is F. But if you look at NVIDIA by itself, you're just leveraging yourself. Now, here's what you could do. Buy NVIDIA. Do what I just did with QQQM. Buy NVIDIA. Oh, come on. Why does it keep auto-correcting? Buy NVIDIA shares with 50% of your money. And then if you believe that it's a short-term upside, leverage yourself and buy NVDL. Anthony, that would be the way I would play NVDL. I would not say, hey, NVDL, it's an absolute buy. NVIDIA's going up no matter what. NVIDIA could have a glut of chips like we had in 2022. And all of a sudden, nobody wants to buy them. They could also get another, hey, you can't sell them to China anymore. Like that kind of thing. Again, NVIDIA is a hold in the quant. I wouldn't worry about it. Just buy NVIDIA. Nayland from YouTube, can you please give your opinion on TSLL? We'll go over TSLL. This is the same thing. It's a levered 1.5% against Tesla. Now, Tesla over 1 year, you're up 96%. Year to date, you're down 15% on this one. It's a strong sell. Tesla right now, in fact, let me look. Luke didn't want it. Who wanted Tesla? Let's see, Butch from Facebook. We'll go over TSLL and Tesla together. Butch from Facebook. Apologies if you covered Tesla in the last few days. I'm looking to buy back in around the weekly 200 EMA confluence with lower daily TMA band, monthly 50-day EMA, and it would also be a double bottom on the weekly. Bollinger Bands on the daily started to expand too, and daily RSI at 36 currently. Lots of bearish news recently with stock recalls, strikes in Europe, increasing pay for workers, lower demand, especially in Europe, Germany, where it has only European manufacturing plan is down 80% in December. CPI coming hot won't help. It's in a downward trend. However, the new Model 3, if you haven't read about it, it is awesome. The Highland model will be available in the next few months, and China sales are good. Could be a tailwind. Thoughts for the group. I'm looking at 195 to 215 for entry, but this is Tesla. I may get in front of it with the bids if the bids go lower. I wrote back to Butch. I think you're missing. Does Elon sell more shares to fund Twitter? Does EV demand with Hertz selling tens of thousands of used Teslas on the market at rock bottom prices? You can get a Tesla for like $12,000 or $13,000 right now, by the way. And even the shutdown of Berlin for a week because of the Red Sea shipment delays in Europe. He missed all of those. Tesla and here in TrendSpider, they said, hey, Tesla is trading below its 200-day SMA for the first time in over 2 months. This is what's tough. The other thing is that you've got potential price cuts. Yes, demand in China is good, but their competitors continue to undercut their pricing. You have no confirmation in this 4 hour. I would rather see you, and I've said this with Tesla a lot, and I have gotten Tesla wrong. But I just think this may be the time that Tesla sees that downturn under its 200-day. On the weekly, you're right at the 200-day. I don't think you need to time this, but I do think at 223, we're down 1% again today. I just think that this one you want to wait until you have confirmation in the chart that you're trading. And on this weekly, you don't have confirmation. If we go down to a daily, let me just put a daily in here. This is how you look at a stock. If we go down to a daily, you have no confirmation. You're trading below your 200-day, like TrendSpider said. That MACD is below there. So not only do you want to take a look at the macro with the fundamentals, where this one's overpriced, but it has been completely, you want to take a look at what this stock is actually doing, and it's not doing well. And you've got January 24th, their earnings coming up. The issue, the Cybertruck. For instance, I just saw a video about the Cybertruck trunk, the auto close on the trunk, smashing fingers. That's not good news. They seem to not have sensors that will stop the trunk from actually crushing someone's fingers. I see a lot of bad news in Tesla. I do not see a lot of good news other than they sold out of their inventory here in the U.S. That's very good news. And they did it at rock bottom, not by not dropping the prices too much. So what do I think of TSL versus TSLA? I think if you look at the charting on this one, I think both of them have a bit of a stumble coming up. Now, I've been more wrong than I have been right about Tesla. But if you look at TSLA versus TSLL over 1 year, TSLL makes you 97%, TSL makes you 84%. Year to date, TSLL, because it's 1.5% leverage, it's down 15%. Tesla's down 8%. If you look at a 3-year, you can't compare these because, again, 3 years, Tesla's down 48, or TSLL is down 48%. That's just in half the time. Tesla's down 15% in 3 years. So you have to take a look at A, your time frame, B, do you want to be levered into these stocks? My answer would be probably no. Right now, I just think Tesla, I think you're risking it. I'd rather go in with QQQ. I'd rather go in with TQQQ. I'd rather do something that's actually winning than take a chance on a stock that has potential downside, not only because of the demand for the product, but because of their leader who may, listen, I don't mind Elon. I've said it before. I think the guy's got his own personal opinions. I don't begrudgingly, say anything to anybody about their opinions. But I do think that Tesla, with Twitter being the mess that it is, I think that guy will be willing to sell out Tesla in order to fund Twitter. And he ain't getting funding from anybody else. So that's my thought. Mark I don't know if he was saying good morning or he wanted me to look at GM. I'm going to take it from YouTube that Mark, maybe you wanted me to look at GM. It's a shit show. I don't like the company. I don't like the leadership. I don't like anything about it. What's interesting is, while I don't like anything about it, here in this run, this bull run, you're seeing we're in a 27% gain. Hold on, the dogs are crying. What do you want? Hey, come here. Come on. Come on. Go under. Okay. Here in this run from November, you're seeing a 27% gain. That's really good. From a long-term perspective, you're looking at it pulling back. Do I think it's getting back up here to the 43 mark? Probably. I think they're switching. I think their dealers are lying to them. I think there still is demand for electric vehicles, just not for the shitty electric vehicles that these guys are putting out. And it's a horrible company. GM is run by horrible people. I think Mary Barra, who wants to tout that that they've got the lead in electric vehicles, I think she'll say anything to sell vehicles. She was also the last one to settle that the strike with the workers. Yeah. She got a 40% pay increase, and she didn't want to give them a 10-12% increase. Come on. She's ridiculous. Luke, he wrote to us about UUU, the uranium. I appreciate your response and insight on UUU. Means a lot. I agree with your theory on crypto, with Ethereum being the trade amongst a much larger band of crypto. ETH should be the trade. I actually, Luke, while UUU might not have been a good trade in my mind, I think it was up yesterday. I know Cameco Corp, which is another uranium, I believe, they went up, but this one is up 8% today, UUU. So don't trust a douche on the internet. You covered that gap. I played that one. What's interesting is I was listening to a podcast yesterday, and I found URA. URA may be a better look at uranium than just UUU. But URA is a global ex-uranium ETF. It's not as up as much. But if we look at the holdings, Cameco's the number one, Sprout Physical Uranium. This might be a better play on uranium than UUU. Just because I think rather than having a single exposure to it, you might be safer in that. Because I do think that uranium is probably a good play going into stuff. Sam from Facebook. Hey, Gary, I've been playing around with the MACD settings and Webull charts, and I came across SAR. This is Saratoga Investment Corp. It currently trading at 23.34. The average target price is 27 on 8 ratings. Finviz has it at a 1.6 and 27.89. It has some downgrades. Most recent was yesterday to buy from neutral. Finviz is showing a 12% dividend. The PE and RSI doesn't look bad to me. Would you mind taking a look at it to see what if I'm on the right track with the settings? And of course, I love your thoughts on the stock as well. So here's Saratoga, SAR. It got you out with an 8% loss. It was just after earnings. Huge, huge downside. Doesn't bode well when you see a huge downside like that. But like we talk about all the time, any reaction in the market is an overreaction. The algorithm loses you 4% over 24 months on this. Meanwhile, the actual asset loses you 18%. Your average win is 6%. So we do have a gap up here. Are we coming back to the 26 level? Let's take a look. And I think I told Sam to look over here in Seeking Alpha, because I think Seeking Alpha gives us a better look at it. There's big yield, significant discount. They do have a 12% dividend. And I will tell you from Finviz, if we go over here and we look at what Sam was looking at, SAR, you can see they have a market cap of $303 million. They're making $32 million. Their PE is 8.54. They have a dividend of 12%. Now, remember on Finviz, this is a backwards looking dividend percentage. On Seeking Alpha, they give you a forward. So they're telling you what's expected, and it's 12.36. So they are expecting them to be paid. If you go in and you look at the dividend history, you can see that it was recently just upgraded. It looks like 2022. They really started upgrading it, and then they paid more in 2023. So it looks like that dividend is probably going to continue to go up. The consistency is still a D. And that's what they're saying is you don't know what it's going to be. The yield is A+, the growth is B, the safety is C-. That's just on the dividend. Now, if we look at the actual stock, you've got Seeking Alpha analysts say buy, Wall Street says buy, Quant says hold. The only thing that's got a D is momentum and revisions. You can see December 26th, this dude says big yield at significant discounts, buy. October 13th, this dude says he says strong buy. They just had their earnings. You can read about the earnings stuff. Net interest income. This is what Saratoga Investment, non-GAAP net interest income. $1.01 misses by 3 cents. Total investment income beats by $48.48 million. You can read about the earnings. I don't think you're horrible at this one. But what I would tell you is go and in Seeking Alpha, get the Pennant Park Investment Corp, PNNT. This is a higher rating than Saratoga. PNNT, let's take a look at the chart per se. Let's see what the algorithm gives us on PNNT. And again, this is just based on Quant, and they do their, look at how much that one's in an upward trend. The algorithm here makes you 19% versus losing 2% in 24 months. Your average win's 8.69. Right now, the algorithm has you in right here, 8% up. This is why you really want to have tools in your toolkit to be able to look at this. Again, commendation on finding Webull, on finding this one. I think it's a solid rebound play on SAR, but when you add tools like Seeking Alpha and you add tools like TrendSpider, it ups your game. So it's not a sense of, oh my God, you can't do these things in free tools. It just ups your game, and you find different things and you find better setups. And that's kind of where I would go, Sam, is I think you're on the right track. I think that one in particular, I would read more about why they gap down that way. SAR it worries me that it's another situation where they're paying out a dividend and they're not investing in their core business. But you can see every time it hits that 200-day, it just jumps back up. So, ignore COVID. This is kind of a 12% right here, and you can see the VWAP right around 26. So probably not a bad one. But I think there probably are better plays than that one. DEX, you mentioned you do options. What are things you look at when you buy a call or put? I don't do options. DEX, you might have misheard me. The only options I've ever done is buy covered calls. And the only reason I've done that, and they're long dated to covered calls, and it's for Apple. And the reason I buy covered calls is because I plan on getting rid of that stock. But I don't want to get rid of it now because maybe I want to hold on to it for a long term. So say you buy, Apple right now and you want to hold on to it for a year, but you think there's a chance that this one's going to go down, but you own the stock. Buy a covered call. That's a year dated out, 6 months dated out, but if you want to hold it for a year and you just bought it, or 6 months from now, but you want to hold it for a year, buy a covered call, collect the premium while you sit there and wait for the stock to either fall or go up. You can collect the premium. So that's the only options I've ever done. Am I planning on doing some options? Maybe. I mean, I just typed a note in Substack. If you follow me on Substack, you'll probably see it on your Substack feed. But Trader Nate, he's had like 80% gains. In fact, let's go over. I think I can. Yeah. Here's my Substack notes, which you can see. Trading right here. Nate is killing it. He's had 96% on Marvel, Shopify, 88%. He's just been killing it. I mean, he actually, just solid options player right there. And he's got the paid newsletter if you want to do options. I will not do options. I'm not smart enough to do options. I don't need options to make money. I am much more of a long-term investor. So sorry you misheard me, Dex, but I don't do options. I got a great email from a listener that took his first trade. That wasn't speculation, Justin, using the MACD and RSI. And he made a 14% gain. High five, Justin. Love it. But he wrote to me too. Would you look into SGD, safe and green? I'd like to know your thoughts if it would come back. Or he's not a chart guy. I just don't understand it. I trade volatile stocks. Stuck in this one. Just curious for your thoughts. SGD. Let's see SGD. I think I'm going to yell at you for this one. Oh, come on. SGD. Safe and Green Development Corp. So, this one's ugly. I mean, this is a low. If we just go and we look at SGD here to try and see what they do, they're real estate. They have no dividend. 13 million. They've only got 16 million shares outstanding. It's only floated 3.5. Good luck in filling this order. I mean, that's what I would tell you from this one. There's no news on it. There's no insider stuff. There's nothing to say. I mean, this is 100% a momentum play. It's down 6% right now. I will tell you, over 114 days, because it's an IPO, the algorithm makes you 110% versus losing 76%. You know where your 110% came in? It's right here. One trade. On November 10th, it is up here to 190. If you bought in there, you're up 305%. It got you out. This is a momentum play. You want to trade it on a short-term time frame. It's got there's no news. I mean, there is literally nothing for me, Justin, to tell you that this is how you blow up an account is by this. It's got nothing. There's nothing. There is literally nothing covering this because it's just a new one. If you're playing this on hype or you're playing volatile stocks, you're going to lose your ass. I mean, that's as simple as I can tell you. There is no charting on this. There's no 200-day. There's just a 50-day. It is a brand new stock. I wouldn't trade it. That's my thing. Let's look at, there's the 200-day for stuff. Let's look. Raul, I'm writing to you today, seek some advice on China. As per the technical data, there isn't any confirmation on SQQQ or KWEB. These are two China ETFs, SQQQ. KWEB is the most active one, and I think the one that you want to look at. But yeah, Rule's right. There's no confirmation right here. Even if we look at a weekly, this has just been a dying market. I understand China stocks may continue moving sideways till hopefully a recovery by Q3 and should then take off. Please do let me know your thoughts. I'm also in recently HDB, Google, HAS, Amazon, AMD, which I bought in October. Everybody says that in upward stocks. They wish they would have bought sooner. Here's what I think about China. I don't want you buying any of this China stuff until we start seeing it recover. Right now, from what I understand, the Chinese are, if you look back at 2007, 2008, they have 3 times the amount of housing crisis that we had. And what I think I've gone over it before in previous stuff. Long term, I think we lost somewhere in the neighborhood of 50%, 60% of the stock market during that time when we were in a housing crisis. If you owned a house, you lost at least 50% of your home's value. It's crazy. I mean, look at, I drew this on KWeb. It's not worth getting in. You're better off right now. The Bollinger Bands are cinching up. They're contracting. You're going to see, if I had to guess, it's below the 9-day. We're going down. We're just going to continue to go down. There is nobody holding this KWeb above where, right now the biggest KWeb is between 27 and 31. Do you want to buy it? I don't think so. I mean, in my mind, it's overvalued. You look at BABA, you look at all that stuff. Just get out. I mean, Raul, I would say there are 100 better places. If you want to invest in foreign, let's see, Japan. Let's see if I don't want Japanese yen and stuff. Let's look at Japan ETF. EWJ. Just, go into EWJ. This is a Bank of Japan. Japan's at an all-time high. Japan's doing perfectly fine. Look at Seeking Alpha analysts say buy, quant, buy. If we do KWeb, I think some people are saying buy, but I don't know what the quant says. Quant said strong sell. You just have to stay out of it. You don't want to be in this market. There's nothing in the quant rating that says get in. And you can miss the first 10, 15%. Just get in later. So Raul, stay out of it. Continue to buy Google, continue to buy Amazon, continue to buy AMD. Buy those. Buy QQQ. Let's go over QQQ and TQQQ. Because I do think that I said it yesterday. I said that we would start the day lower, but we would wind up positive. It took, a turn yesterday, but we did wind up the day positive yesterday. If we look at TQQQ, I'm still holding TQQQ. And like I said at the beginning, I'm going to continue holding it. It still got confirmation. You're up at $50.27. I think I bought it $50 and somewhere around here. Let's see. I'll tell you exactly where I bought at. Let's go into Fidelity. We'll log in. And I want to show you a 5-minute chart. That's what I want to show you on TQQQ. Because, again, if I wasn't doing this damn podcast, I would probably have gotten out and bought a bunch more before this. But look at TQQQ. So what happened was I bought in here at about $50.27. Let me see. Maybe 50-50. All positions. We'll go down to TQQQ. I bought average price $50.22. So I wound up buying in this area at about, we needed the extended hours. Let's see. We're going to go over here and we're going to do display extended hours. I wound up buying, let's do the extended hours yesterday. We gapped up and then I wound up buying at about, I guess, not 1920. About this time, I saw it kind of falling. Yeah, 50.22. So it was around 8:45 when I bought. We had confirmation. I know we had confirmation when I bought it because I was watching it on the 5-minute. We had confirmation. I bought it around this time. It went up. Then we just tanked throughout the day. What would be the time to actually buy it? I probably should have sold it when we lost confirmation right here at about $50.43, $50.40. And then waited for confirmation. And if you waited for confirmation, say you bought at the top of this candle at 49.13, and you just waited for it to touch, to start to lose confirmation, There you have a nice 2% gain. So you have a nice 2% gain. You get out. You buy SQQQ because TQQQ started to lose. And then through the day here, we lost confirmation here right before this was at, let's see, 6:45 this morning. We were down. So if you bought, 6:45 this morning, you're watching the charts, we don't have confirmation. You buy when we have confirmation. Now, did you get out here with a 0.16% loss? You had to wait for CPI. And if you waited for CPI and you got out when we touched it, you got another 2%. So you don't have to make these long-term trades if you want to trade TQQQ. Now, right now, the MACD is crossing down. You can't see it, but the MACD is crossing down. The RSI is in no man's land at 52. You can trade on a 5-minute chart. Absolutely, you can trade on a 5-minute chart. It's not a problem. We'll push that up so you can see the MACD crossing down. Again, it's a 5-minute chart. You can take the fundamentals that I give you and trade on a 5-minute chart. Not a problem. I am holding this because the chart that I am looking at right now is the 4-hour, and we still have confirmation on the 4-hour. Yesterday morning, we touched the 9-day, and we kind of lost confirmation. We traded between $48.40 and $50.97, so I kind of bought at the high. But I'm just buying this one because I do think that we're going into another bull run. That's it. Simple as that. So why am I holding? I think we're in a bull run. XLY got a cross up here. We're trading up 0.47. Remember, I hold this one because it's 50% Tesla. We haven't seen the huge downturn that we've seen in Tesla, but it's 50% Tesla and Amazon. So I like it. I think it's 45% now. But we saw that one cross up. So that one has a buy-in. SPG, I went over this yesterday on my 1031 podcast. I said it's a solid stock and told you earnings were solid with a 5.75% dividend. You'd be fine here. Just over 1 month later, you're up 24%, 3 days away from hitting the ex-dividend date. Ever since then, you're up again. I mean, ever since I published this note and said, hey, you're up again if you would have bought there, you're up a nice 3% again in 33 days. Solid stock. DOCU. Part of the reason why I buy DOCU is because it's got that cross up. I saw the cross up happening. It's at 62.44. You could have gotten in at 61.39. You could have gotten in at $59 and made some decent stuff. You're seeing the cross up here. You're seeing the RSI. It's overbought. Do I think you should get in? I think if you think that this is going to sell to private equity, it's a damn good risk. RYLD is another one that got it. We talked about UCO with the Red Sea stuff. I'm not buying it today, but you can see we had a buy-in here at 26.52. You're trading at 27. It's up 5% today. Again, it's a triple levered ETF against gold futures, VTI. One that I have in my own personal list that I like, which is a database company, is Frog. This one, the algorithm makes you 31% versus the actual asset makes you 21%. Your average win is 11%. You win 41% of the time. So I think this one's a good one to get in on the algo. If we look at a long term of this one, you're just rebounding. You're above your 50-day. You got confirmation above your 9-day. It's a solid one. If we go over here and look at this is where you run into trouble, is they're not making money. Their forward PE is 65. Year to date, they're down 2%. Over 1 year, you're up 55%. Target price is $35.58, and you're trading at 33 right now. The recent upgrades are all in the 40s. That's where I'm kind of looking. Now, Scotiabank in September, they initiated coverage at 29. So take this 42. I think that's where you're at. I'm not buying into this one, but you can do some research into this. I like Frog. Again, it's a software company. I did listen to a podcast yesterday where a biotech CEO said they were paying $5,000 per seat to a software company that basically took their data and aggregated it and blah, blah, blah. They hired a software engineer who said, yeah, we don't need all the bells and whistles that this $5,000. And they have a company where they have, I think, 1,000 employees. So it's, $5 million a month that they were paying for this software. And the software engineer said, let me just use AI. within 2 months, he was able to code a software platform that identifies exactly this is where you're going to be with some of these software programs like CRM, Salesforce, and stuff like that. It's going to be an issue because companies can take that data and they can throw in an AI prompt and build code. It'll take 10 software engineers that they can pay over a year, maybe $100,000 each. It's $1 million versus paying $5 million a month. Yeah, and they can do it in AI in a year. So, I think that's the problem you have with some software companies and the integration. I don't think people realize how incredibly deflationary AI is going to be with the coding. So Twilio, we had a cross up on Twilio. It probably will come. You can see it. It just doesn't have a buy. It got you out with a 2% loss. I think you're looking at probably 77, 78 on this one. This is a company that I used in my old as a product manager. It's been beaten down. Same thing. I think it's coming back. One that I was looking for a pullback to get into. AVGO. This is Broadcom. They're a chip company. $1,100. It's not crazy. I mean, if you want to get in, this is the pullback that we're going to see in this kind of stock. When we look at a weekly, you're at all-time highs here. So it's a little bit difficult to justify this when I've got some other companies that I could buy. This is part of the reason I bought QQQ. When you go and you look at QQQ, the holdings, again, it's 100. It's the top NASDAQ 100. If we go and look at the holdings, you can see Apple, Amazon, NVIDIA, Broadcom. 4% of it's Broadcom. So I have exposure to Broadcom, which got a cross up. Again, I point out a lot of the names in today's are the NASDAQ 100. The Dow and the S&P had very few cross ups. One that actually crossed up on the Dow. Remember, the Dow's only 30 stocks. But IBM, this is a mainstay. The problem that I point out with IBM is we've had this crazy run of 17% up in just 73 days. That's a big move considering when you look at a monthly of IBM, look at where you're at. You just crossed the 200-day, which was 142 just a couple of months ago. You could have bought this at 142 in 163, March 2011. You're just getting back to even after what? 13 years? So that's where I'm a little bit skeptical of, hey, are we really moving towards it? But your 50 days starting to move positive. Your 200 days moving positive. The Bollinger Bands are expanding out. You're trading at the top of the Bollinger Bands. If we have another move, I think the top is 175 in this. But it's a place where you could probably park some money and be fine. In the meantime, you're getting a 4.12% dividend. So plenty of stuff. I will have a paid newsletter. I will try and do a tools video on Monday. Monday, the stock market is closed, so I'll try and do a tools video. Maybe I'll do it live, but I'll edit it together for you and post it on YouTube. Okay, you guys have a great weekend. I will talk to you from a rainy Atlanta. Talk to you later. Bye. Okay. Fly, eagle, fly. I like that, Christian. I did not buy more oil and gas. I bought TQQQ, I bought QQQ, and I bought DOCU. Yeah, Christian, I think it's an exposure thing. So a company holds that Bitcoin, they're going to need to continue to buy Bitcoin, I think, in order to fund a lot of those ETFs. I don't think it's where they don't buy Bitcoin. I think they buy it and then they use the proceeds to buy more Bitcoin. I think that's the way that it works. But it does track the price of Bitcoin. That's why you're seeing some of these go up more than others. But the way the ETF works in general, yes. They're not splitting it up between 100 people. They have the 100 shares floated. But I believe that they will buy more Bitcoin with some of the proceeds. I think that's the way, and they'll issue more shares. So that's why big money works a little bit better. Morning, T-Dog. Okay, let me. But I think you're right, Christian. That Red Sea stuff with energy. I thought it was crazy that we didn't go up when the Red Sea stuff started. Let's see. We're going to get rid of all of this. Move to trash. Move trash. And let us do these two because I did pause it. Damn it, Daisy. Share. AirDrop. Good. Bluetooth is working. I think that's a good play. Honestly, I think you guys will be fine. If I were to, I would not buy UCO over the weekend and hold it over the weekend. But I think Devon, I think XLE, I think any of those energy names, I think you'll be okay. I like that play. I'm in long on Devon, unfortunately. I'm in long on Oxy. I mean, looking at the market, let's see, indices check on the on my holdings. I am up 0.05. Is that Apple driving me? Because is Apple up? Yeah, Apple's up 0.12. So it's not like I'm a genius on that one. But I do think sent. Okay, done. I'm going to move these to the trash. Yeah, Devon is hurt. Devon is hurt to be in long term. Definitely has not been a solid stock. The problem is, and I pointed this out, we're in that downward trend. I mean, we're solidly in this downward trend. The 200-day is still just at 40. So I think 40 is probably in play. But you get some type of, let's see what Seeking Alpha says about Devon. Hold, buy. This is from January 5th. A strong E&P play with attractive capital returns. Yeah, sure, they returned it to shareholders, but it hasn't been as good. I mean, if you look at Devon's dividends, their valuation is D+. Their growth is a D. Their dividend safety is a B. Growth is A. Dividend yields is D+. Look at the yield. 4-year average yield is 5.99. 1-year yield on cost is 1.27. If you look at the dividend history, it's going down. I mean, look at that. April, last year we had 69 cents. Then we had 52. Then we had 29. We're back up to 57. But what do you get, at the next time? I mean, you look at the 10-year. Look at each one of those. We went up and now we're going down. And you had this little bump up. So I'm not a huge fan. Here's the thing. Ranking in industry, 22 out of 69. What's the Southwest Energy? Oil and gas explaining. Southwest Energy, EOG, and Coterra Energy. They're all in the 4s as far as the quant's concerned. Devon has just been, I mean, it's beyond me why it's lagged. I'm sure there's some analyst in here. Let's see. Everyone's saying buy. Why you shouldn't catch this falling nice again. Let's see why this dude says it. Devon investors continue to struggle as surge in oil price has dissipated and given back their gains. Brent crude oils have fallen below 80. Devon's increased dividend payout and strong free cash flow may not be enough to reinsure investors. Devon's price action suggests dip buyers trying to catch the falling knife must brace for more pain. A weaker oil market could wreak havoc. I argue why it's time for Devon holders with significant profits to consider rotating out, as astute investors have been doing so since late 2022. I'm a junior researcher, a seasoned investor. I mean, he's been right. Surge in oil prices, quant factor grades. I expect the $40 support level to be breached decisively, suggesting investors should anticipate a possible retest of the zone with critical support at 35 level. I can't argue with him. What? Let's see what this is. This is a 20 moving average is red, 50-day is blue, and 200 is the purple. So you've got, this is a inside bars visualization. It's a 1 week. So this is a weekly of Devon. And this is from October lows. Yeah, I think he's been right. I mean, honestly, this bearish one, it's been one of the most disappointing ones for me. And I've got, what do I have? Let's see. I'll tell you where I'm at. I have not added to it. I will not add to it as it's losing, and I may ride this one down. My average price is $49.68, so I'm up there. I've got cost basis. I spent $10,000. I am down $1,000, so it's not horrible. I mean, you know, again, I think I've sold some that was a gain. So. They just completed a payout to me. Yeah, that Ryan's right. Yeah, here's the thing, Chris. I've probably gotten, I mean, in those dividends where they're paying out 5-6%, $1,000, I may have gotten a couple $100 in dividends. So to respend somewhere else. I have not, the reason I have not gotten out is nothing more than I just wanted exposure. And, you know, I did get out of Exxon. You know, I was pretty clear that I got out of Exxon at 103, 104, somewhere in that neighborhood. At the end of the year, it was like 101, maybe 102. Let's see. Yeah, up here probably. 102, I got out. I got out completely. I got out of PXD at 235, somewhere around there. Didn't play that one correctly. Should have gotten out up here at the 250 level, but I got out around, I think around here, 230 level. But that one was a smart play. It's just energy has lagged, and I'm not, you know, I still have Oxy. I have Oxy at a higher price. I think I'm around $60, to be honest with you, 61. Buffett continues to buy into this one, and this is another one that just hasn't done well. Hey, Christian, we're pumping all-time highs here. It's not, I don't think green energy has anything to do with it. I think that's a political stance. I think the you know, we've never pumped more oil and gas than in this country. We've never pumped more natural gas in this country. You know, we hit all-time highs in the fourth quarter of natural gas exports. So we've got plenty of energy in this country, and we're continuing to pump it out. So I think that the story isn't about green energy. I think green energy is more expensive and it's cheaper for the oil and gas. I think green energy is where you're going. And so more investment in the older energy, it makes no sense. You know, China makes all of our solar panels. China makes the wind farm stuff. Do you want all that manufacturing to be over in China, or would you like it to be somewhere else? I mean, that's the question. Yeah, nuclear and oil. I'm not against nuclear. I just think smaller nuclear plants are better rather than the jumbo ones. I think, Bill Gates's nuclear, micro nuclear plants are significantly better for the environment, and they're cheaper. So you could sustain it that way. I also think Elon is right that localized, and I would argue oil and gas are not oil and gas are. So the way the grid works, and my understanding, and I am not an electric company guy or an energy guy, but if you were to have solar panels on every house and provide some type of geothermal building in this country, you could cut the need for the grid and the need for heating and cooling by a significant amount, therefore cutting your nuclear and oil reliance. And so I don't think that nuclear and oil are, you're seeing in a lot of these third world countries how solar panels are just changing people's lives. It's nuclear and oil and gas. I mean, cheap energy is going to be a way. I remember listening to the All In podcast, and Freebird, who's the resident science guy, said there are new compounds that have changed the world, meaning that the compounds, to propel a car, we need energy. Compounds that you could pave roads with and you could put on tires that have zero friction. You don't need any energy. You don't need any energy to actually propel that car. So I think, we're a long way away from there. Yeah. Yeah, I mean, listen, energy is just energy. I think you're going to see the ebbs and flows. I mean, take a look at this. This is where I go to the entire time, is that when energy is cheap, the U.S. actually does better in production. And you can see, we're going to go monthly for this. Maybe we'll go quarterly. XLE quarterly, you go back to this. Look at this rise. Monthly probably shows it better. If you look at this, that's COVID. But prior to this, go back to XLE, the 2000s. Let's see. Yeah, no more data. So I go back to about 1999 here. XLE was 20. You had your nice rise from 2002, where we had huge inflation. Then the housing crisis hits, and XLE goes from 86 down to 40. And nobody can afford energy. Gas didn't go negative, but you had it go down to 40. Then you had this huge glut of energy, and it goes back up to 82. I'm just saying, I think this is where governments push the price down. I mean, energy is commodity. It's a currency. So if you don't think that it's manipulated, just like currency is, come on. I mean, it's gonna get pushed down, and so my expectation on energy is not straight up to the right. It's that we're gonna see these ranges, and we've been at a range, so. Yeah. I continue to think, it's I'll buy QQQ all day long. I won't buy XLE for a long-term kind of thing. That's just, I mean, again, we all have different investment ideas. We all have different stuff, but yeah, if China comes back, when they ramp back up, I just, from what I read though, Christian, I mean, that housing crisis, look at what this did to our housing crisis on energy. I mean, this is XLE just in this country. That's a worldwide thing. Look at what that did. Imagine 3 times the amount of housing crisis in the U.S. just in China. They're significantly larger than we are. Not from an economy standpoint. It's from a housing standpoint. So look at the MACD on XLE from a monthly. I understand completely the theory of short-term trade. I just don't think it makes sense to hold on to it long-term. I think while energy is absolutely needed, I think you're manipulated. I think it goes down. I think, some companies make it up. Look at, Cameco today. CCJ. This one is up 8% today. 8% jump. Why did it go up? I didn't even look. CCJ. Did they have earnings or something? Prices seen rising even higher. Jump as Department of Energy seeks contract bids from domestic production. That's what it is. Uranium prices seen rising even higher. Supply tightness. So this is supply and demand. But this is up, uranium's going up. I think nuclear is probably, nuclear for me is the happy middle ground. I will tell you, as a Georgia resident, I pay something like $10 a freaking year, $15, $20 a year for this effing nuclear plant that is not needed. It was needed decades ago. It's been going on for a decade, and they're still not done. So I like Google. I like NVIDIA. I think NVIDIA's value is just, even though the PE is high, it just continues to go down because they're making so much money. They have so much pricing power. I think Meta, with the advertising of political stuff this year, I think that's a solid one. The core portfolio for me, Amber, is it's a good mix, but I'm an ultimate tech. I mean, if you ask me bullish stuff, I'm going to point you to stuff in QQQ. I'm going to point you to SMCI. I really like SMCI. I don't think this one's valued effectively at all. 343 is a little expensive. You're seeing the button hook here. I'd want to buy closer to 300 than anything. Taiwan Semi at 101. I think that's $110 stock. So you got that one. Netflix. I think Netflix is getting back to the $500-$600 range. I just did a good one today. I know you probably joined late, but I think a good one today was the analysis between the ETFs that I found that I actually own. IGM, which is an ETF, IYW, and XLK. I think you'll find that one super interesting to play back when I post that. And I like, Bitcoin. I mean, I like crypto. The play, I think, is not Bitcoin right now. I think Bitcoin has run. I think Ethereum is your play in crypto markets. This one's up 3.75% today. Whereas I don't think that GBTC or any of the Bitcoin stuff is up. GBTC is down 4%. So I like Ethereum. So, I mean, there's a lot of opportunities out there, Amber. I'm just a little bit, my portfolio is my portfolio. It's not going to make sense for everybody to have that portfolio. So I try and keep a little bit of privacy, but when I do trade, I try and make sure that people know that I am trading. And I just bought a ton of QQQ. I bought a ton of QQQM because that's a lower cost. It's got a little bit of a different holding, but QQQ versus QQQM, I bought, about 168 yesterday. I like both of it. I'm going to be more for tech than I am anything else. And I think I track the Qs more than I track the S&P. And I think the only reason I do that is because of history. Short-term history, I should say. I'm bullish on the near term and long term. I think we're going to have a tough from now till June. I think you're going to see ranges because pushing into all-time highs is tough. It's really tough. But you look at QQQ. We'll just look at a long term on this one. We'll go to a monthly. You've consistently hit all-time highs here. So I don't see a reason why we don't push past this. I do think it won't be like this. So this is your monthly. I don't think we're going to see this from, let's see, November, let's do November 2021 to the October 2022. I don't think you're seeing that 37% again. I do think there's the possibility that you see something like this, which is a 21% drop, if things start to break. I just don't see anything breaking. So if you're asking me, am I bullish short-term, long-term? I'm bullish short-term and long-term because I just don't see anything breaking. I put my cash to work. I think that's the best example that I can tell you. But remember the number one tool, Amber. Don't listen to a douche on the internet. If you're seeing problems, if you're nervous, if you're losing sleep at night, get the hell out. Any investment, it's not worth it. Wait for that pullback. I don't know that, I could be Bob. And if you're a long-term listener, Bob. Bob bought at the all-time highs for what? 30 years? And he still made out fine. So I didn't see that. Hold on. Company has 15 battery powered forklifts and needs more energy. Let's Google it. Clean Technica. Is it this one? Hydrogen fueled cell trucks. More green hydrogen for fuel cell trucks. Zero emission forklifts. Google can't find it. I don't know. I can't see it. I've been sitting on ET. ET is a great company. I mean, ET, Energy Transfer, that CEO, I think this is where the CEO's just been buying and buying and buying. Yeah, I've been covering this since he bought it. It started buying it at 13 and 12. I mean, it's at 13.93, and it's got a 9% dividend. You go and you look here. ET. Let's try DuckDuckGo. Okay. Let's see. DuckDuckGo. And we'll take this. Copy. Paste. I don't see it, Christian. I see all positive things about electric forklifts. Even on DuckDuckGo. Hold on. You didn't put a link in. Did it stop you from putting in a link? I don't see a link in the chat. Christian, FYI, oil and gas is based on government subsidy too. Why do you think these fuckers don't want to, they don't want to pay taxes. They don't want to pay land fees. They don't want to pay taxes. They don't want to pay the government. So, if you put as much money as we put into oil and gas, into green energy, be fine. There's not a ton more. There's a ton more now going into green energy because we haven't developed it. But over the years, we put so much into oil and gas. Oh, did I miss it? Where is it? Zero emissions forklifts reducing your carbon footprint. There's nowhere near enough power on the grid. Is this it? Let's see. Boom, boom.
Mr. Boyle, we acknowledge they're heavier. We acknowledge they're more expensive. Maybe the incentives don't even cover the excise tax. What's it cost to insure a vehicle like a large truck that has these extra costs and weights and an infrastructure, frankly, not designed for 5,000 more pounds per axle and those kinds of?
Right, sir. Yes, it's hard to tell because we're so the consumer-oriented, the consumer-facing EV product is so much further ahead, right? Mm-hmm. We're talking about a very heavy-duty, under high-stress, corrosive environment. Just so we're clear on the scale of the issue, each electric vehicle battery for a heavy-duty truck weighs 8,000 pounds, and you need at least 2 of them. So we're talking the weight of 4 or 5 cars. And my friends and peers in the industry nationwide who have tried to make efforts to put in, say, hey, I'm going to convert a dozen forklifts to electric, or I want to tee up a facility for 30 electric trucks. There's no power. The utilities come back, the cities come back and say, is this some kind of joke? One friend tried to put in Illinois a facility, tee it up for 30 trucks electrification. The city came back and said, this is some kind of...
So, again, I question this because Amazon has put their electric vehicles. They're buying more electric vehicles. They just can't build them fast enough. Okay, let's see. Let him finish.
Joke, you're asking for more draw than the entire city requires. And just to give you an idea, 30, 50 trucks, that's like a 5-6 megawatt application. The factory that makes the trucks is a 2 megawatt factory. So we're playing checkers right now, and we'd be delighted to have more choices. If the power and infrastructure is not available, it's not even a consideration for trucking. Yet California wants to make it effective next January. That's the only choice. No diesel trucks. No OEM is going to be compliant with the California CARB standard for diesel electric trucks starting in January. They'll have product due to credits and so forth, but none is going to be technically compliant. What are we talking about here? We're trying to serve the country and supply commodities that are essential to everyday life. So before any of this is not kind of a choice. We have the cart before the horse right now.
I would agree. The grid needs to be upgraded. But I will tell you this. Amazon and Christian Rivian. Have you not seen this one? That's the greatest truck there is. And the Amazon built their own infrastructure, their own battery plants, their own stuff. You know, Tesla developed their own electric company in Texas. So it's the infrastructure. So, you know, again, you have a choice in the country to, you know, do infrastructure. The electric infrastructure is so fucked up. You lose 40% of the energy that's developed in this country because of the grid. If you can localize that power, you're fine. And I would argue with that guy, the companies that want to use these things, they're trying to draw it off the grid rather than do it local. You could set up a battery plant in that plant that probably gets 50% of it from solar or wind or renewable power, and you know doesn't need it from the grid, and run those forklifts. So my point is, yeah, he says it. I couldn't find an article about it. It's just a YouTube. I mean, he testified in front of it. My friend. Hey, my friend told me he had $5 million in the bank. He's just asked me for a loan. I think Amazon's using anything that they can, to be honest with you. I love this Rivian van. If you haven't seen a tour of this Rivian van, it is awesome. Amazon says it's their top vehicle. They ordered 100,000 vehicles from Rivian. Rivian, I think, has delivered less than 10,000. In fact, Amazon thinks that it's so good. They have opened it up. They've told Rivian, hey, we no longer want you just to make it for us. They allowed others to take it. But the problem is Rivian can't make them fast enough. And I will caveat this. We don't know what the long-term outlook of this is. So I'm not arguing there needs to be we should get rid of oil and gas. I just don't think that people understand there are different ways of doing things, and I think we're prohibited in this country by the conservatives saying we want cheaper and cheaper and cheaper energy. And at moments, you know, those fossil fuels, they're just not good for the environment. And it's like pipelines, man. You know, pipelines, you have to get the oil somewhere. And so if you're not doing pipelines, you got to put the oil, you know, on trucks. And how are those trucks, you know, how are they powered? Powered by oil and gas. So moving that stuff around, if you could deliver energy locally and get infrastructure up, you wouldn't need as many trucks. So I think we're all kind of in agreement. If you can get renewable energy cheaper, it'd be better. I just think renewable energy is probably where you're going in the future. So continuing to, put money into oil and gas and continuing to pump, sure, it gets you short-term, gains, and you can continue to power stuff. But my feeling is I'd rather be the leader in the future than the leader in the past. So, and Saudi, by the way, is seeing that. Why do you think Saudi's putting money into Lucid? And Exxon is trying to get some renewable energy and stuff like that. So I think it's interesting. I'm not going to solve the problems of the world with it. But that's why I tend to want to invest in tech over energy. Energy will provide you income in the short term. I just don't think large oil and gas companies will continue to provide you returns because I think oil and gas is as manipulated as currency. And the price of oil and gas is just as manipulated as currency. And if you don't think that's the case, the Houthis trying to blow up oil and gas distribution, that's what they're doing. Blowing up the Russian pipeline, whether it was the Americans or someone else, that's what they're doing. They were trying to cripple, Russia. So it's just manipulated. That's why I tend to, tech is just as manipulated, but yeah, hopefully that answers your question. Okay, I'm out of here. I got to go edit this stuff together. You guys have a great weekend. I will see you Tuesday. I may go live on Monday. Do the tools thing. Maybe record it here. And then edit it together. But there will be a couple of paid newsletters, I think, this weekend. I'm planning at least one, if not two. I am still holding Mara, the rabid badger. I am still holding. I did not get out, and I went over it in the podcast. I went over it. We can get out of that, and we'll go to, I showed, if I were being smart, extended hours, and then we'll go to a 5-minute. If I were being smart yesterday, there were two things that I should have done. I was on air and doing the podcast during this time, but this is a 5-minute chart. When you saw it lose confirmation, you should have gotten out. 27, 28, should have gotten out. We've lost confirmation again. So there's no reason to get in right now. I am still holding. I don't expect this one to completely crash. But if we look at the algorithm on this, let's see, 4-hour algo. I think it may have gotten you out yesterday with a loss. Yeah, I actually got you out with a gain, 137%. Got you out with a gain yesterday of 136%. I'm still holding. My guess, and it's just a guess, if we look at this, I'm going to pull this back to the last time it peaked. Because is anybody holding up in that area that I'm at? Here's your volume shelves. So, remove all annotations. Yes, we're going to remove all annotations. I do think that this one goes higher. I think we're seeing it pull back a little bit. I think you're looking at probably 17 at being a support level there. My belief is that it's, again, a $30 stock. I will not get out until it hits $30. I'll probably hold for long-term capital gains. Once it gets to 17, we gain another confirmation level. I think I'll get back in. I'll just start adding in dollar cost average. I don't own that much. What do I own? A couple $1,000s worth? Let me see. I think I bought like 100 shares like I did with QQQ. Let's see. All positions. Mara, I own. There's Mara. 100 shares. I am down 10% right now. No, I'm down 22%. My average price was $26. So I bought it 26. It's at 20 right now. So, but it's 100 shares. It wasn't a ton of money. We're not talking a ton. Now, am I worried about losing? Yeah. I mean, it doesn't feel good to lose, but I'm not one of those guys that manages stuff. Yeah. One of those, I mean, that's the thing is, if you're going to play at these levels, I'm on the 4-hour. I should probably get out just because the 4-hour kind of tells you to get out. But I do think that I'd rather have long-term than short-term. And even if it went to zero and I lost $2,600, I'm not going poor. I'm not going to lose my mind. I'll make it up somewhere else. I've got more money, in other places. So it's about managing your positions, managing your risk. I don't do a great job of managing my capital that way. And remember, Mara is one of those dangerous portions where I had too much too much money, and I just get into dangerous positions. But QQQ, let me see. We're at 408. We're down below where I bought it. I think I bought it at 408 something. We're just kind of hovering. We were up in the market, so now we're kind of getting down. Bank of America's down at 32. I think I'm losing in my Fidelity account. Let's see. I'll do the indices check. I was up earlier. Yeah, I'm down. I'm down 0.09, but the markets took a downturn. So I think people are selling again. I think they're selling, and they bought into the news of PPI, and now they're selling. I still think we wind up the day positive, but we'll be closed on Monday. Okay.